Hello, this is Edmund Shing, Global Equity Portfolio Manager at BCS Asset Management. This week's Global Equity Strategy presentation looks at fund flows across the globe. We'll focus here today on predominantly the US and European fund flows. US household wealth. How is it today? Well, 24% of household wealth, here shown in light blue, is in equities and equity mutual funds. Only 13% is in housing equity, and that is despite the strong performance of the housing market. US households still hold 12%, a large amount of their household wealth, in cash, despite the low interest rates. The change over the last 12 months, plus $7.6 trillion in household wealth. So again, a very positive wealth effect driven by here, nearly $3 trillion added in equities, thanks to the strong stock market, and nearly $2.2 trillion added in housing equity, thanks to the strong housing market. And these trends continue to December. If we look at the worldwide fund market, it continues to be dominated by Europe and the US, with over 80% of total assets held in the two areas. Now, if we look at the US, we can see the last 5 months in this chart have seen selling of bond funds, here in green, buying of equity funds, here in blue. But a long way to reverse the positive trend into bonds, here in green, and out of equities, here in blue, since 2008. So we could go a lot further still. Now, if we look at Europe, this switch has only just started happening in the last 2 months. The big switch over the last year and a half, in fact, in Europe, has been out of cash in terms of money market funds, this dotted line, and into bond funds, this green line. And again, equity funds here in light blue have only just started picking up. UK funds have seen the most bullish investors in terms of equities. These dark blue bars are the inflows from retail investors in the UK into equity funds, being very strong for the last 7 months. Finally, looking at exchange traded fund flows, we can see on this chart from BlackRock that this dark red line is very strong. This is the 2013 inflows into equity ETFs. In particular, US equity ETFs in dark blue, but also Japan ETFs in orange. Europe is starting to catch up here in light blue, but can go a lot further. One area out of favour here in dark blue are emerging market ETFs, given the poor performance of these markets this year. So to sum up, the US wealth effect has been boosted over the last year by stock markets and housing, and these prices continue to go up, so the wealth effect should continue to be positive. Secondly, the equity bond switch has started to happen, but it can go a lot further both in the US and in Europe, given the trends of previous years. European investors remain more cautious, and again, still much more potential to get into risky assets like equities. And finally, for the contrarian investor, perhaps it is time to look at emerging market stocks after a poor 2013, given the good valuation that they sit on. But the consensus bet right now is to buy European equities. That's it. Thank you for watching. This is Edmund Shing from BCS Asset Management saying goodbye.